Hello, this is Brian Shannon from AlphaTrends.net. Today is Friday, July 25th, 2008, and we just finished another volatile week where the S&P 500 was down just slightly on the week, and as I said, it was a volatile week indeed. So let's take a look here at the daily time frame. Let's take a look there. Of course, we've got this level that's psychologically an important level near about 126 because that was the lows from January and March, and the fact that we remained below there after the market tried to recover could be setting us up potentially for another downside move. Again, we've got a declining 50 and 200-day moving average, so you want to be very careful with long positions when it appears as though the market is in a critical area where it may break down from. And that level really is, I've been saying 125. It's probably about 124.75 or so. If it can hold above there somehow and pull this off, then maybe we'll get a more protracted recovery. However, we're starting to see all these moving averages here on this daily, on this 30-minute time frame, and the 5-day moving average is flattened out, where the other ones are all declining. So that tells us the momentum has been lower in here, and we've got to be very careful. So we saw that the market tried to break out. We saw that first lower low in here yesterday, and the market remained trapped underneath that 5-day moving average after it tried to it attempted a recovery, but found sellers at the 5-day moving average. So that's not a good sign. I think that breaking below 125 and actually, like I said, 124.75. I didn't draw that properly, but more like 124.75. Breaking below that level and holding below it, then I think that it's possible we'll see a retest of these lows down in here and maybe further continued downside into new low territory. So again, you've got to continue to be just very careful here in this environment, as it is very volatile, and we're seeing things change very quickly in here. So let's take a look at oil. Oil lost another $2 today. Yesterday we saw a bounce that did nothing to damage the downtrend, the intermediate term downtrend that's been intact. So that was down nicely today, about 2%. And you can see in here that this market, perhaps it's headed for this level right here, or testing this level, which is $98 a share. So the moves have been quick, and they seem to stay weak for a while, and then you get these sudden and sharp rallies that reverse the move. So I think if you're short, probably want to put your stop just above this level. Again, the definition of the downtrend is lower highs and lower lows. That's what we've got in here. So if you've been patient and riding this down on the short side, what would invalidate that short-term downtrend would be a higher high, and a higher high would occur just about $101 a share on the USO or so. Let's take a look at the UNG. I don't have that, so let me just type it in here. UNG. This is the natural gas, and I said maybe 2 days ago maybe we want to start looking for an area to buy, but there's been zero evidence so far that there's a reason to buy in here. Yesterday we saw a huge volume, but it was down again today, so perhaps the market will attempt to recover in here, but right now there's still no reason to get involved. There's nothing that's making it look like the buyers are anywhere close to taking control. Maybe about $44 a share next week. Then it experiences a short covering rally, but very dangerous trade in there as well. The Russell 2000, as we know, has been the leader for the most part of this rally. This week it was up 2.8%, which was the best of these indices that I take a look at, and we saw that it got up to this prior level of support here. Found a little bit of resistance that was coincident with the declining 200-day moving average, and now we're back below that 50-day moving average for the second day in a row. And again, the 50-day moving average is declining, so you've got to be very careful with this market. We're seeing lower highs and lower lows. This is the level that I thought might offer some resistance. It did about $71.25. So now we've got to be on the alert that if it breaks below this level, then we're probably headed down at least towards 68. That's an important area, and a break down to there would make a very nice trade in the TWM, which of course is the double inverse short for the for the Russell 2000. Let me go back for a moment to the SPY. As I said, the market for the week lost 0.21%. What I wanted to do was take a look at the VWAP and go back 5 days to the beginning of the week. So um, here's the week. I'll just start the line right here, but you can see the average price that this market traded at was right around, well, of course, that 5-day moving average. That's not volume weighted, but right around in here. So that adds a little bit further to the 126.70 area as far as potential resistance. That was the average price that people traded SPY at this week, 126.70. Here we are, $1.15 below it. So most people are in a bad position there. Semiconductors, as I said, are a reason to be concerned about the Nasdaq overall. This group was basically up 8 cents today. For the week, though, down 7%. A lot of times you see the SMH leads the Qs, and people talk in general terms on television about, you've got to be long tech. Well, if you define tech by anything with a semiconductor in it, then I think you have to be concerned, because the semiconductors are a very, very important component, obviously, in anything to do with technology. And if their business is bad, if their fundamentals are bad, if people are bailing on these stocks, then it puts all those other stocks into jeopardy as well. And that's obviously a large part of what the NASDAQ 100 is made up of. So the NASDAQ 100 for the week was down about, it was up about 1.5%. The average price that it traded at, if we go back and take a look at a VWAP in here and go straight across, was actually below where we are. It was right around that 44.90 or so. And you see that it held up here very well today. In fact, what happened was it took out yesterday, it took out this little level of support in here late in the day. Looked like it might have been setting the market up for a test of that 44 level, but buyers came in and saved the NASDAQ 100 quickly this morning, that is, on the open, and just saw some stability and boring sideways action in the NASDAQ 100. Overall, we continue again to be range bound 44 to 46. We still have to keep an eye on the potential for this inverted head and shoulders pattern setting up. The fact that this market holds up is somewhat encouraging, but again, the primary trend is lower, so you have to be cautious in here. But if it can get above this level right here, and realistically, I think 45, 90, 46. If it can get above there and hold above there for a period of time, then it's possible we could see this market get squeezed up towards that $48 level next week.